is crack. You try to go, but we all know you'll be back because the internet is crack.
The Internet is Crack, the show that asks the question, can we coexist with our creation?
Hello, my name is Seth Camillo.
And I am Caroline Risberg, and we are The Internet is Crack by addicts for addicts.
And we are very, very lucky to have Professor David Yermack, the Albert Fingerhut Professor of Finance and Business Transformation at the NYU Stern School of Business. And we are so grateful for you to give us and our viewers your time and expertise in a subject that we're all going to need to know a lot about in the coming decades. I think our first question is, what is blockchain?
Okay, so the blockchain is the ledger that is used to keep track of transactions in a particular cryptocurrency. So I think people probably realize that there are thousands of cryptocurrencies. The first one was Bitcoin that was introduced 16 years ago. And at first, they were created rather slowly. It really took a couple years before you saw what were called altcoins or alternatives to Bitcoin. But now it's really so easy that you could sit at home and create your own currency, and many people do that. So there are tens of thousands of them. But each one of those currencies has its own ledger that keeps track of which wallet holds the coins and the history of who has spent the coin by sending it to, from which wallet to which wallet. And that ledger is called a blockchain. A blockchain is an innovation that actually predates cryptocurrency. Bitcoin was launched in 2009, but the first blockchain was almost 20 years earlier. It was actually developed by cryptographers working at a place called Bellcore, which is a successor to Bell Labs. And it was meant to create a way to record information so that it couldn't be changed or erased after the fact. And so cryptocurrency allows people to pay one another without a trusted third party. There's no bank or credit card company, nobody who comes between the two people. But the reason you're able to do that is because you have a very, very secure ledger called the blockchain that people can rely on unconditionally to report the truth about who either did or did not pay somebody at a certain time and so forth.
So how would you even go about paying somebody? I know that sounds simple, but let's say I have a Trump meme coin and I want to pay you for being on our show, how do I do that?
So if you can identify the person who you wish to pay, their wallet will have an address that is called the public key. And paying them is really as simple as entering a code that opens your wallet and then the code for where you want the coin to go. So this typically will be done through an app that may be loaded onto your phone. So making a payment is really very similar to how you might use Venmo. You would just kind of wave your phone at a sensor that would read the QR code. And then internally, it would simply need to know the address of where's the coin going, and it would need to authenticate your permission to open the wallet that holds the coin.
Wow. Okay. And then I heard you talking in a lecture you gave previously. An Ethereum is a coin, but it's also a way of working in general. You can build other things on top of it. Is that correct?
Yeah. So you should think of Ethereum as the ability to make payments contingently, or maybe programmable money is another way to think about it. So you enter into a lot of contracts. Like if you buy lunch at McDonald's, you have to pay McDonald's. But there are many other contracts, like you probably have life insurance or auto insurance, where there's going to be a payment only if something happens, like only if you wreck your car. So health insurance pays off only if you go to the doctor and get sick and so forth. And so what Ethereum allows you to do is to have essentially future transactions that are contingent on something else happening first. In other words, It's a lot like insurance and risk management. And
Mm.
the economy is full of contingencies and things that you may or may not need to do depending on information you do not yet have. But the whole logic behind Ethereum is to allow you to build what are called smart contracts that will execute at some point in the future if you need them to. And it's a way of really implementing the kinds of things that have been going on for hundreds of years in finance. Insurance has a long, long
Uh-huh.
history,
Uh-huh.
and
Mhm.
derivatives like futures and forward contracts and so forth.
Uh-huh.
All of
Mm.
this can be programmed into contracts, again, without a third party being necessary. So typically, if I want auto insurance, I need to go to the insurance company. Or if I want a commodities derivative, I need to go to the Chicago Mercantile Exchange or someplace like
Exactly. Yeah.
that.
Right,
And put
right.
in your
And
order.
the point of Ethereum is to eliminate all those bookkeepers and record keepers and just allow people to contract directly with the contingencies well specified in the language of the contract. And many of these things are really off the shelf that you don't have to write the computer program yourself. You can just say, I want a forward contract, or I want to insure against the weather being too hot if I'm, a farmer or a ski area
Mhm.
or something like that.
Mm.
So the name that this has been given is called decentralized finance because the activities you can undertake, they really span the whole field of finance, but it's decentralized in the sense that nobody's in charge of it, that you can simply program it up yourself at home. And if there's a counterparty willing to take the other side of the risk, you just meet up in the marketplace in Ethereum where there's buyers and sellers, 24/7.
Oh, okay. So you don't need, as you said, you don't need a third party. So I could reach out to someone about, let's say, insurance. I want to, whatever,
Yeah.
and hopefully somebody accept it. Is that or?
The simplest financial transaction is where you buy and sell, say, shares of stock. And at any moment in time, there are hundreds of buyers and hundreds of sellers, all of whom hire brokers to match them up on the floor of the exchange.
Mhm.
But we could also just go to an agreed destination online called a liquidity pool. And the liquidity pool has the queue of buyers and the queue of sellers. And there's an algorithm that figures out what is the market clearing price. And so you don't need
Hmm.
the brokers or the exchange or the clearinghouse to settle the trade. You just do it directly with the help of the algorithm. So, the trading example is a very simple one, but there's lending contracts where people who want to borrow and people who want to lend, they both show up in the same virtual place on the web. And then there's an interest rate that is determined essentially by supply and demand. And you can get into much more exotic contracts, all sorts of futures, options, swaps, contingencies, all the stuff that we teach about in the university. It's relatively simple to program that up. And you just need enough sellers and buyers to take either side of the transaction. But that's exactly what this is designed to do, is to recreate the markets without a lot of the overhang of the transaction costs and regulation and so forth.
Mhm.
Is this theoretical, or are there enough people who want to invest that it's actually a live marketplace?
No, these are very real markets. I think at this point, what they're trading, though, is mostly other crypto assets. You are
Oh.
beginning to see the migration of what people call RWA, which are real world assets. And the one category that has begun to have at least a noticeable trading volume are US Treasury bills. Because, almost everybody holds treasuries. Banks all around the world, need them because they are the risk-free asset, so called. And what
Mm.
people
Mhm.
have done is essentially put volumes of treasuries in escrow and then created digital tokens. They've tokenized the inventory of securities. And Wall Street has done this sort of thing for many, many years. For instance, if you want to trade a stock like LVMH, people will buy the shares in Paris and then sell the equivalent on the New York Stock Exchange to American investors. And
Uh-huh.
in between, there's a way to put them in escrow and make sure they're safe. You can do the same thing online, that you can take $10 million of treasury bills and then issue $10 million of tokens. that are secured by those bonds. And the idea being is it's just a lot easier to trade these things on the blockchain peer to peer than to call Morgan Stanley and say, hey, I want to buy some bonds. And,
Right.
I think you're going to begin to see many, many assets get tokenized and trade not just on Ethereum, but there's, a whole suite of these things with names like Solana, Cardano, Avalanche. There's, in fact, a lot of competition to host these markets. And I think over time, you're going to see innovation that continues to drive down the cost, improve the security, and so forth. But I think all the financial markets eventually will end up here.
You do.
In the
Yeah.
1960s, we got rid of paper stocks and bonds and began using computer databases. You guys probably own investments, but I bet you've never seen them. All you see
Nope.
is
Right.
you see a statement from a broker. And I think in the background, this is really the next step, is to just turn
Mm.
these into digital tokens that people can trade peer to peer without the need for all the third parties whose job is basically to keep track of things. And,
Hmm.
potential to drive down the cost enormously, to make the markets more transparent. It
Oh,
still
okay.
takes more than a day to settle a trade on the New York Stock Exchange. It really should be something that's settled instantly, and this technology can do that.
Would you think it's more secure? Is it more
Uh,
secure?
The security comes from the blockchain. Bring this back
Okay.
to your first question, that you have a ledger that is so safe that everybody can trust that what it says is actually true. And I
Okay.
think it's hard to exaggerate how important that innovation is. There's probably things that people show you all day long that you wonder, is this really true? Can I trust
Mhm.
this? But if there was something that you knew you could trust unconditionally, that there was, zero probability that it wasn't actually true, it would allow you to move much more quickly and with more confidence in and out of different
Mhm.
transactions and so forth.
True.
And that's really the innovation here, is there's a better way to keep track of things. It's an improvement on double entry bookkeeping, which is something that people have always thought kind of came down from, Moses with the tablets and so forth. But, double entry bookkeeping was an innovation, back in the Renaissance. And now in the computer age, we've come up with a better way.
And do you think that this will, because it sort of democratizes things, will it allow um non-institutional investors to get returns that are closer to institutional investors in terms in
Um,
their ability to not
Seth,
use
let me
brokerages?
let you in on a little secret. The institutional investors do worse than average.
Oh, really?
Oh,
Yeah,
really?
no, I mean, this is a whole nother discussion, but
Huh?
on average, people on Wall Street do worse than average. And it's the passive buy and hold, grandmothers who, are the ones who outperform, usually because they don't trade that much. They don't pay the brokerage fees and taxes. But, the point about democratization, and I would take it in a little bit different direction, it's that you don't need anyone's permission to be part of this system. Um, you
Oh.
guys have bank accounts, credit cards, all kinds of consumer financial instruments. But for every one of those, you had to get authorization. You had to pass someone's credit score. You had to turn over personal data. Your privacy was invaded, maybe just a little bit. But on these decentralized blockchain systems, absolutely anybody can open a wallet. There's no one, excluding you. There's nobody saying who's allowed in, who's not allowed in, who's worthy of being part of the bank, that kind of thing. So in that sense, yes, this is, very democratizing, and especially for something like 3 billion people in the world who are unbanked, who don't have access to regular bank accounts. It's just enormous potential for this system to bring people
Oh.
on board and provide basic financial services.
Wow, that's like
Y
40% of the world's
Yeah.
population
Yeah.
doesn't have a bank account.
Yeah, there's,
Yeah.
sub-Saharan Africa and big parts of the Middle East and South and Central America. Like, nobody has banking in those areas. Very, very low percentage, only very rich people. And it's something that if you are able to make payments and engage in very basic saving and lending and so forth, um, it can really improve your quality of life.
Do you think that it will improve the ability to find investment in third world nations?
I don't know. That's a whole nother side of the market to understand what is promising and what's not. Um, what you'll have with blockchains is a lot more transparency about who is investing and who owns the stock. But I think to identify good companies, you need to do the legwork. Wall Street was shocked that there's a Chinese company that knows something about AI. And my
Yeah.
question is like, who wasn't watching China? Who didn't see this coming? And apparently nobody was. Um, so, if people do their homework and travel and, roll up their sleeves
True.
and meet the locals and, it costs money and time, but there's opportunities out there for people willing to do the research. I'm not sure that's ever going to change. I think it will be cheaper to access these opportunities, but
Mm.
identifying them, appreciating the importance of the technology and so forth, it's probably always going to be difficult. The next big thing that everyone has been talking about for decades now is called quantum computing,
Yes.
which,
Oh,
these would
yeah.
be computers that are like a million times faster than the computers we use today. And suffice it to say, the Russians and the Chinese are working on this.
Believe
If
it or
they
not.
come out of the closet one day and say, "Hey, look at this fast computer," nobody should be shocked. And hopefully, there's programs going on our side of the fence as well. But yeah, these understanding, who stands where in this kind of competition is potentially very valuable. And
Yeah.
we tend to rely much more on the private sector for these things. But still, I think even in an economy like China's, there's got to be commercial opportunity if you know which companies have proximity to the technology and so forth.
I have a question. Like now with Trump and Melania, they have, I guess they've just did this meme coins.
Right.
I mean, how does that even, I mean, it get recently launched. And so I mean, what's the worth? How can you, because the
So,
market went up, right? It was
yeah, no, it
valued,
was
I don't know how,
crazy.
yeah.
Tens of billions of dollars. Um, a meme coin is a collectible. It has really no economic role other than to identify you as the supporter of a team or of a politician or, a community of some
Okay.
type. And
There's a
these have had an interesting trajectory. I think you've got to realize that there are tens of thousands, and you never hear of 99.9% of them. But a couple of them, and the really famous one is called Dogecoin.
Yep.
Mm.
But there's also the Shiba Inu coin. There's a few of these that kind of break out of the pack and really get traction. And people own them to express the affection or loyalty for the sponsor. And
Mm.
you guys have heard of Beanie Babies,
Yeah.
Pet Rocks,
Yeah.
and
Yeah, 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 yeah.
Tickle Me Elmo. There have been all these novelty items that very briefly had unbelievably high prices in the marketplace. And I think the economics underlying that are really no different than the economics of meme coin. In other words, this isn't anything new. It happens to be using this platform and this technology. But in the old days, politicians used to hand out stickers or posters or whatever. Now they have the online equivalent. I'm very confident that the Melania meme coin won't be worth $10 billion in, even a week from now.
Right,
But,
right.
at the moment that it hits the market, there's always the belief that if I get it first, I can flip it to somebody else, and it's going to go up at least for a while. We call this the greater fool theory in finance that, I'm a fool for buying this, but there's an even greater fool than me. And this works until it stops working. And I would advise people not to get involved.
Right. Yeah. So if I, let's say, I would buy a, Melania meme coin right when they released it.
Yeah, if you have inside information and can be the first person in line, it's possible to make money off of these things.
May But also
I-
big risk. It could
yeah, the half-life with which they decay. I'm actually interested in collaborating with a colleague on a study of meme coins and
Yeah.
looking how long does it take people to lose interest in different projects and what
Hmm.
causes that. But I think we can go back to research into the arts and advertising and things like that have been interested
Hmm.
in very similar questions for decades. And I think a lot of what you see in these markets are just people transferring behaviors that they've engaged in analog markets, on television and baseball card markets, et cetera, and just bringing them to a new generation of people who are more in touch with their mobile phones, who live their life online in the palm of their hand.
Well, I remember how
Mm.
mortified I was. I remember talking to my friend who's a mathematician, and I found my baseball cards, and I told him, Ben, I found my baseball cards. I'm going to be rich. And he said, Seth, I hate to tell you, there's been about 10 years ago, there was a major correction in the market.
Yeah, I mean, it may come back. You have to time these things when the market's hot. And, there was a wave of baseball
Hold
cards.
on.
Many baseball card companies were started to cater to the demand, but these kinds of speculative bubbles, we tend to trace them back to the Dutch tulip bulb craze in the
Yeah.
17th century. That's probably the best known, and sometimes people refer to crypto as tulips, digital tulips.
Oh,
And
yes.
I
Did read
think with
about
the
that.
meme coins, there may be some truth to that.
So could anyone technically could set an eye and do the
Oh
internet is
yeah,
cracked meme coin?
yes, no, you can right after we're done recording the episode, you could go launch your coin. I've got one of my former students who's now a professor at the University of Florida. He taught a course in Ethereum where on the first week's homework they had to launch their own coins. Each student had to
No.
program, and it was a homework assignment basically. And then as the course went on, they had to try to market them to each other, and so forth. And it's very easy to launch these coins. It's much
Oh,
harder to
really?
get people to want to own them.
Yes.
Yeah.
That's basically a marketing problem.
So basically, you maybe have to be famous, or you have to be
I
something
think
that
that helps a
makes it.
lot. Many of
Yeah.
them have celebrity spokespeople and so forth. And this has actually led to some interesting legal problems because
Mm.
if you are a spokesperson for a company raising money in the securities markets, that's not illegal per se, but there's lots of disclosure that's required. And you've seen people go into these digital markets like Paris Hilton and Steven Seagal, the Evander, no, I think not Holyfield, but one of the old boxers, Floyd
Mhm.
Mayweather, I think was the
Mhm.
first person who kind of got
Of course, Money Mayweather,
impaired
yeah.
by this. But the securities regulator in the US alleged that these things were investment securities and that these people were spokespeople for securities issuers who had to follow the laws that had been in place for decades. And the defense is these are not securities. Whatever they are, this is not your jurisdiction. The SEC
Mm.
regulates stocks and bonds and things like that. But this is not something issued by a company. They're not raising money. Um, the you know the economic arrangement of these things really looks very different than classical securities. And so this has left a big void, at least in the US, about who, if anybody, has the legal authority to regulate these markets.
Mhm.
And Trump grabbed this issue in the campaign and said, we're actually going to bring this into the modern world, write some rules that make sense and so forth. And whatever you think about Trump, and people do have strong feelings, including me, I think
Mhm.
identifying this as political work that the U.S. has fallen behind in
Uh,
is very, very correct. That the regulators have been arguing with each other, making it up as they go along, but there really needs to be a set of rules written by Congress that clarifies exactly who, if anybody, gets to regulate which pieces of this. And I think if you look around the world, the European Union has done a lot of this already. And you can
mhm.
look at other jurisdictions, Singapore is one, Hong Kong, Switzerland, where, essentially they recognized years ago that the technology was here to stay, but it had to be regulated on its own terms. You couldn't pretend that this is just another flavor of stocks and bonds. And
Mm.
I think the US has a lot of catching up to do. And I think crypto people are very hopeful that the new administration will be a lot less naive about this.
He definitely seems to be cognizant of crypto in a way that our previous president wasn't necessarily.
Yeah, I mean, it's a little bit ironic because Trump has been president before. And
Right.
when he was in from 2017 to 2021, he hated crypto. And, he had nothing but scorn for it. He was dismissive of it.
Mhm.
And I think everyone gives credit to his son Barron for saying, "Hey, Dad, take a look. This is actually something that all the young people know about. It's really quite promising as a technology." And Trump has changed his position on this 180 degrees. I think a
Mm.
lot of this was transactional, that he thought he could get the libertarian vote. And
Mm.
we typically have a
Mm.
libertarian presidential candidate who gets about 2% of the vote in every, Gary Johnson, you may remember.
Mhm.
Mhm.
And Trump was essentially expecting a very close election, which it was. He won by 1.5%. And
Okay.
Mhm.
he saw that these votes were potentially pivotal. So he changed his whole view on crypto and went after the libertarian clientele. They ended up not giving him the nomination, but I think a lot of libertarians did vote for Trump anyhow. And
Right.
I give him credit for recognizing something new where there was a political opportunity to step in and, set things right. Whether he ends up doing that or not, time will tell. Trump, has a short memory and tends to change his mind very, very frequently. But I think it's overdue that the leadership in Washington take note of the technology and see it
Yeah.
not just as a risk, but as something that's really very promising for the financial markets, where if we're successful at co-opting the best parts of this, we can really make a much better economy.
He's talking about like a Bitcoin stockpile, somehow having the government, I guess, purchasing Bitcoin or I
Yeah, we have a strategic petroleum reserve that is meant to, stabilize the oil markets because that's an asset that almost everybody relies on, to drive their car, to fly in airplanes. And the idea of a strategic Bitcoin reserve is that this too is an indispensable commodity. Um, I don't really see the logic of this. We already have an asset called the dollar that we encourage the rest of the world to hold as a strategic reserve. And I'm not sure why we would want to introduce a competitor to our own. I think this would make much more sense for the BRICS countries or people who are envious of the US, but a strategic Bitcoin reserve would mostly hurt us. And there are two
Oh.
countries in the world doing this already, Bhutan and El Salvador. And we usually think of ourselves as part of like the OECD, the G20. These are usually not the people we're trying to mimic or cooperate with.
Right.
And I don't think the strategic Bitcoin reserve is anything other than speculation on Bitcoin. And that's not why we pay taxes to Washington. If I want to speculate on Bitcoin, I can do it myself at home without the government doing it for me. No, I think a lot of the crypto people just want him to, increase the price by having the government be a big buyer. And I think
Mm.
even Trump should be able to see through their motivations and,
Mm.
realize that this is really not something good for the U.S. taxpayer. Bitcoin, many people think it's valuable because the growth of the Bitcoin supply is limited by a mathematical algorithm. So we have central banks around the world that decide how much money to print, how many dollars there should
exactly.
be.
Right.
And ultimately, that's where inflation comes from. And, the value of the currencies relative to one another is really due to the behavior of the central bank governors. With Bitcoin, it's governed by an algorithm, and it's an algorithm that's all but impossible to change. So the scarcity that's programmed into Bitcoin arguably makes it valuable. And if someone like the US government buys up 1 million Bitcoin, which is a number that I've heard thrown around, there's only about 20 million circulating. So if the US bought up, say, 5% of the world's supply, it would drive up the price until the US decided to sell, which would
Well.
have the opposite case. And I don't know that this is really something where we have either the expertise or really the interest to get involved. It's, a whale in this ocean that tries to manipulate the price of crypto.
Can Bitcoin eventually take over?
Well, this is sort of the utopian case that there are some people they call themselves Bitcoin maximalists who do think that this
Mm-hmm.
will happen. That,
Mm.
eventually all these sovereign currencies will inflate themselves down to zero value. All that will be left is mathematics, and Bitcoin will still be there. So this could happen. I think there are many good reasons that it probably won't and shouldn't, but certainly you can find people who will tell you this narrative and say, the reason
Right.
I'm holding Bitcoin is for the long term because the dollar will blow itself up. There'll be some economic apocalypse, and this will be the asset of final reserve.
But couldn't Bitcoin lose its value as well?
I would think so. I think
Yeah.
the vulnerability of Bitcoin and Ethereum and so forth is simply innovation that someone else could come up with something a little bit better. And we've
Mm.
seen this in technology all the time. You guys probably used Netscape Navigator once, and you did your searches on Yahoo, and
Yeah.
they get overtaken. And
Yeah.
the barriers to entry are pretty low in technology. You just need a kid writing code on a laptop at home. And I think that all the crypto assets are vulnerable to people essentially improving on them. And
Mm.
one of the issues with Bitcoin, I said a moment ago, it's very hard to change the algorithm. That's a virtue in the sense that that the rate of growth will never really change. But it's also a big problem because it can't modernize or improve itself. And
Oh.
the technology behind Bitcoin looks very 2009. I think Ethereum is now having these issues, looking over its shoulder and seeing 6 or 7 very credible competitors. Ethereum had something like 80 to 90% of the DeFi, the decentralized finance market, on its platform about 2 years ago. Now they're down in the 60s because, there's people essentially improving, taking different directions, different approaches. There's probably room for many players in these markets, but I'm not sure that Bitcoin is going to stand as the unique, asset of last resort. It has a first mover advantage, but it's very cumbersome to use. It's slow. It can only accommodate a certain amount of traffic. That if you're designing it today, you would make very different choices than what made sense 16 years ago when they launched it.
The idea of a finite number of Bitcoins, if we were to adopt it as a national currency, seems extraordinarily dangerous. I mean, we have central banks for a reason to respond
Right.
to various problems. You sell treasury bonds. We do what you know. We need to be able to manipulate our currency in order to have a functioning sovereign government. And it seems like if it's a fixed number of Bitcoins, we're going to have problems potentially.
What you just brought up is actually what attracted me to this whole area. There's a set of questions here that are very central to macroeconomics. And it really has to do with the behavior of the central bankers. And what you've just described is sort of one side of this debate, which is sometimes simply called the discretion, that you give these people the freedom to apply their expertise, to intervene, to manipulate exchange rates, interest rates when they think the time is right. But the other side of this debate, and it's often linked to the University of Chicago and orthodox economics, it's called the rules side, where the best thing the central bank can do is set fixed rules that everybody can rely upon. And once you know what the central bank is going to do, you can then write contracts and have confidence in the stability of the currency and so forth. The problem that most countries run into is that you lose control of the discretion. You just start printing money because it's easy to do. And almost every central bank in the history of the world has collapsed sooner or later, including in countries like Germany, where you'd think they'd have a
Mm.
better idea. But some of the most famous hyperinflations have been in Germany.
Mm.
And I think sooner or later, this will happen to the U.S. I hope it's not for another couple hundred years. But when governments can't collect enough taxes or they can't keep spending under control, they print a lot of money. And people view the discretion of the central bank as really poisonous, that it
Mm.
enables a loss of control of the budget process. There's a lot of people that think we've already stepped over that line, in the US, 20, 30, 100 years ago. People differ, but, certainly it's a central issue in our politics. And with Bitcoin, you can't print more of it. They throw away the key and say, this is what the rule will be. I think the biggest problem with Bitcoin is when there's a fixed number, it will essentially imply deflation, that prices would have to drop year by year. There's a concept called money neutrality, that what you really want is the economy to grow at the same rate that the money supply grows at. So if we have economic growth, let's say 2.5%, money supply should grow at 2.5%. So Milton Friedman was a big advocate of this. And I think most central bankers would at least claim that that's what they're trying to do. But if you stipulate, right off that we're never going to increase the supply, that there's going to be 21 million Bitcoin and that's it, prices would have to fall. And I
Mm.
don't think people are really used to living in a deflationary world. It would, it could work. It could possibly happen, but the psychology would be, completely different. So, if the economy grew 5%, the way I would give you a raise is by cutting your wage only 2%. On cutting else
No.
5%. And I'd say you're
Uh,
3% ahead of that guy. And would people accept that? I think we'd have to teach math a little bit better in the schools, but it's possible. But it would be very, very different.
yeah, I still don't understand how what is a uh, how they can just in country you can just keep printing money, you know.
Well, that's what someone prints it, and that person's name is Jerome Powell.
Oh,
These days, it's electronic. And so it's in the old days, literally, you did run the printing press, but now you just create balances in people's accounts. So you remember COVID where they gave everyone
yeah,
$1,200 just for being there? That's
yeah,
that's the equivalent of printing $1,200. They
right.
could have actually brought, the bills to your house, but they just put it in your bank account and debited the central bank.
And then
And,
debit. Okay.
that's where the inflation came from, by the way. That's why
Yes,
Biden
exactly.
didn't
I was going to say
reelect.
we paid the price for
Yeah,
that.
you gave $2 trillion to people for not working, and yeah,
Yeah.
prices went up then. And
Okay.
but it ran its course. I think, that's all behind us now. But if governments give free money to people just for being there, that tends to cause inflation.
So do your colleagues at the University of Chicago, the Chicago school, are they pro Bitcoin? Do you
Oh
think?
yeah,
Is
they
there
love crypto. It really
Mm.
enables a lot of the things they've been talking about for 100 years or so. And I've got a video of Milton Friedman giving an interview in, I think it's 2003, years before Bitcoin. He hasn't quite predicted, but he says we need an e-currency. And he sort of sketches, the way it would allow people to make payments without having to trust a third party and so forth. It sounds a lot like the way Bitcoin turned out.
Yeah.
And when Bitcoin showed up, it was really the culmination of work that began in the early 1980s. There were many projects, many of them with libertarian people involved, essentially trying to create money run on a computer network. And a lot of them were just channeling the ideas of the old Chicago school. And, this debate never gets old. And when I read about this in the paper, I said, oh, this is, the old central bank debate. And you actually have a credible computer program that's actually issuing money out there in the real world that is going very hard for the Chicago side of things.
Mhm.
And,
Mhm.
this is sometimes said to be a saltwater versus freshwater debate. The saltwater schools are on the two coasts, Harvard, MIT, Stanford, Berkeley. But in the Midwest, you have, the Orthodox Chicago school that
Mm.
has always cast a very long shadow and, exerted a fair amount of discipline over the utopian thinkers on the East and West Coast. It's what makes coming to work fun when you're an academic, is to, engage with these people and try to one up them and so forth.
Yes.
Yeah,
Yeah.
I bet. Is it a good investment? Should I try it? Let's say buy a Bitcoin
You
or
know, I
whatever.
looked at
How do
this.
you even?
I started writing and lecturing about this, I guess it's now 12 years ago in 2013. And I looked at it and I thought the price was crazy, and it was
Yeah.
hundreds back then. I said,
Yeah.
well, where's
Yeah.
the intrinsic value? And even more than the price, the risk, the volatility of crypto is just sky high, much more than stocks or bonds or even very risky companies. And I said, I can't justify this. It makes no sense to own it as an academic. So I've missed, gone up by a factor of like 10,000 since I had that conversation with myself.
Oh,
But
yeah.
I've never owned a coin because I just couldn't justify the risk that it entailed. And so I think I would say two basic points. One is it's now gotten so big that everyone should probably own a little bit just for diversification. So, the
Mm.
rule of thumb, crypto's now like $3 trillion, something like that. And it equals about 2% of the investable wealth, which is to say any diversified investor then should own, about 2% of their portfolio in digital assets. But the other point is that the risk has never really come down. And if you do put money in
Mm.
crypto, it can go way up, but it can drop very, very fast. You can lose 80% of your money in a week or two. And
Oh,
that's happened more times than I've kept track of at this point. So I'm
okay.
sure, the price that you see today can easily and probably will at some point drop by 80%, but then it always goes back up higher, to the moon.
Right.
But
Yeah.
is that a good currency?
No, in fact, the first essay I wrote on this, the title was, Is Bitcoin a Real Currency? And I answered
Yeah.
no. And this was essentially the argument that one of the criteria for a currency is that it should be a store of value. And Bitcoin is not a good store of value because the standard deviation of its price is 9% per day. That's just, very, very risky. And, as a
Wow.
medium of exchange and as a unit of account, it doesn't do so well either. So, I just kind of checked through the three properties of currency. I said, Bitcoin doesn't really meet any of these.
Interesting.
Now it's a new thing, it's still very early in its life cycle and so forth. But I think in the mission that the creator set for Bitcoin to be a payment system, it has failed miserably. People just don't use it for that. Instead, they use it as a reserve asset. Some people call it a substitute for gold, the gold of the millennial
That's what I
generation,
heard. Yeah.
that it's meant to be a refuge against troubled times. But you can look closely at how the price of Bitcoin behaves, and there's not much evidence for that either.
Because gold
Right.
is n- is it doesn't have a high variability, right? It's
Yeah.
fairly static.
No, that's one of the things I did in my paper was compare the risk of Bitcoin to the risk of gold.
Yeah.
Um, Gold has a volatility of about 20% per year, volatility being the standard deviation of price changes. When I wrote that essay, Bitcoin was 140% per year. More recently, it's come down. I think recently it's been about 60%, but a typical stock is 20 to 30%. A treasury bond is 5 to 10%. And Bitcoin's just, multiples times riskier than most of the assets that you're used to investing in. And certainly riskier than currencies or riskier than gold. So if
Mm.
it's the gold of the millennials are in for a pretty wild ride. It's going to be
Yeah.
white knuckle. I don't think it really fills that role at all. I think, a lot of it is just pure speculation.
So let's say you have, I actually know a couple of people who bought Bitcoin long time ago in the very beginning, like okay, they're risk takers. Uh, would if you have one now, let's say I have one, would you sell it or you will hold on to it?
Well, I would actually have a capital gain that would, hang over this whole thing because if I were to, let's say I buy it for 100 and today it's worth 100,000,
Yeah.
I would end up giving 40% of that to the state and local governments. So I think,
Oh, that's right.
just avoiding the capital gains tax would probably discourage me from selling it. Um, but I would have another problem, which is the simple problem of custody. Um, the Bitcoin would be in a wallet with what is called a private key, which is a 64-character string of letters and numbers known only to me. Where do you keep that private key to protect it? And what do you do as estate planning? You could get hit by a bus, and so you would want your spouse to have, and so you sort of need to tell other people where is, how can you get this Bitcoin and sell it? But at that point, you're back in the regular world. You have to trust people. You know, the
Oh,
whole idea
yeah.
behind this is it doesn't require trusting any third parties. But as soon as you realize that we will not all live forever and we can't all remember our private keys, you need to start trusting third parties again. So Fidelity Investments years ago opened a Bitcoin custody practice where they invite you to trust them and upload the Bitcoin to Fidelity. And I think they charge you 2% a year for the custody. And
Oh,
many other firms that do this in finance, who are custodians for stocks and bonds, they also serve as custodians for crypto. And if I had Bitcoin that I'd bought decades ago, I would have uploaded it to one of these people at some point, and I'd
you
be
would have.
paying them maybe 1%, 2% a year to keep them safe and to make sure that my next of kin eventually get them intact, because we will all die. We all need estate plans. But I think many of the crypto people are so young that they, treat themselves as immortal as a first approximation.
Well, at least they can
Mm,
handle the variance, right?
Yeah.
If you have 60 years left, 50 years left, at least you can handle the variance a little bit better than,
Yeah, I do
somebody.
worry, though, frankly, that these things will be overtaken. I mean, I think people will,
yeah,
we talked about this 10 or 15 minutes ago, but I think someone will develop, better coins. And the sun
yeah.
will set. It's like if you had shares of AOL.
Mhm.
Mhm.
Yeah.
Today,
Yeah,
these are collector's items, right? And
yeah.
there's lots of things that are valuable and that, look like they're going to be really important forever. But someone then comes up with a better technology and say, well, wait a minute.
What really bothers me and has bothered me is the people. Okay, it's decentralized, so there's nobody sort of being paid by the Bitcoin corporation, but the people who are, like Michael Saylor, people who are they seem more like evangelists than somebody actually trying to tell me serve their own purpose, which is to drum up, demand rather than
Yeah.
actually give me good advice.
My
And
question is, who is lending the money to Michael Saylor? You
I
know,
don't know.
yeah, if
Yeah.
someone said, I'm going to lend you $600 million so you can go buy Bitcoin, I would say, great. But yeah, but if I could buy the Bitcoin myself rather than lending the money to Michael Saylor to do it for me. And I just don't understand where the money's coming from. I think, a lot of people suspect this is hot money looking for a place to park and, money trying to escape
Mm,
from China, from Russia, God knows where. And there may be some angle like that. But I'm actually working on an academic paper right now because
mm,
there are people who create the Bitcoins and update the blockchain called miners who have big data centers that do all the work. And at this point, there's 14 publicly traded Bitcoin mining companies on the NASDAQ market where, essentially you can invest in them alongside the copper mining, the coal mining, the gold, it's just another type of mining.
mm.
But in the end, they accumulate Bitcoin. And why would I want to own the stock of a mining company rather than just buy the Bitcoin myself? And people lend them money. They have debt. They borrow money and buy more Bitcoin. And again, why would I want to lend these people money to buy Bitcoin when I could just buy it myself? I
Yeah.
I haven't found the answer to this yet. And I think the fact that Michael Saylor has been successful at promoting this, God bless him, but there's got to be an end to this at some point. And
Mm.
if Bitcoin ever actually drops in price, he won't necessarily be able to pay all that money back. And, there's,
That's
That means
true.
Michael Saylor will go from living in a 4-story penthouse in New York City to a cardboard box, I guess, or
Well,
something
it
like
turns
that.
out if you go bankrupt about 6 times, you can then go into politics and run for president. So I I think Michael Saylor will be fine. And this is now something that we can boast of. Not that we went broke 6 times, but that we were able to raise money after the first 5. People still
You're right.
valued the brand. Yeah. So a lot of things have changed.
Caroline and I are going to go off, and as soon as this is done, we're going to short Bitcoin. A
Yeah,
little bit
there's a
about
lot
this.
to
Yeah, I
learn,
agree.
and I think this thing changes a lot, that people discover new side effects of the technology. Um, they develop new algorithms, and we teach a course on this almost every semester at NYU, and it's hard to keep up to date. That there's a lot going on, which it makes it fun to teach, and in a way, it kind of keeps you young. But it's not like teaching capital budgeting or the weighted average cost of capital, where you just get out the textbook and use the same material that was there 50 years ago. This
Mhm.
stuff is,
Right.
it's a moving target, and I'm pretty confident 5 or 10 years from now, it's going to look much more complex and interesting than it does today, but I don't know how.
Oh,
Mhm.
And,
yeah.
I think there's a lot of very smart people working in the area and actually trying to build things as opposed to just, create speculative opportunities.
Well, I have heard you were
Mm.
talking about quantum computing earlier, that I had read some articles that quantum computing, as it matures, may actually be a real problem for
Yeah.
cryptocurrency because it will be able to,
Yeah, it could reverse
keep
engineer all the private
yeah.
keys and, open everybody's wallet and, wreck the whole
Oh,
system.
wow.
And the problem that you have is actually a very simple one, is that you need to make the cryptography more complicated at a rate that exceeds the improvement in the computer's processing. And we actually had the creators of the blockchain, the guys from Bell Labs from the early 90s. They came into class. They're local. One lives in New Jersey and one is in Manhattan.
Mhm.
And the students actually asked this question. They said, "What happens with quantum computing?" And
Mhm.
one of these guys said, "This is not a fair fight, because to make the cryptography more complicated, I just need a graduate student with a pad of paper. And to make the computer go faster, I need $1 billion lab with sterile
Mhm.
condition. There's just
Mhm.
the
Mhm.
physics behind it is very, very challenging."
I think it was Sam Altman who said people are worried about the blue collar jobs, but actually it's probably more the white collar jobs because AI
Yeah.
is doing so many jobs
Yeah.
better.
No, the blockchain means that you don't need accountants anymore.
Yeah.
And,
Mm.
the audit
Yeah, it's
industry is
true.
a pretty, the regulator in Washington actually had me come down a few years ago and keynote their research conference for all the regulators.
Mhm.
And I said, 10 years from now, this conference probably won't be meeting because the profession will be gone. So people
Oh,
were
wow.
very angry, but
Of
that's
course.
exactly the message they wanted me to deliver, to provoke. And I think it may take longer than 10 years, but you've seen this happen in so many other. I even have friends in the clergy who get their sermons, written by Chat.
I actually,
Yeah,
a friend of mine, he was saying the same. He's a
yeah,
pastor. He had a lot of someone that he knows. They doing the sermon.
I don't know that you're ever going to get computers that are creative, that are emotional, that, there's disadvantages to being too emotional, but it also can motivate you.
Yeah.
There are
Yeah.
things that people are able to do that I'm not sure can be replicated by AI, even in its highest form. But yeah,
Mm.
it's gonna be a challenge for the next couple of generations to use this technology, for the best purposes and avoid the worst. And
Yeah.
I think some of the economic problems are very much first order problems that, a lot of middle class white collar jobs involve keeping track of things. And
Mm.
you may not need these people
Yeah.
Mm.
in the way that the automobile got rid of all the horse farms and so forth.
Yes.
And I think in the end, markets are very good at reallocating human capital, but it can be very painful to get from here to there. And
Mm.
I think, we may be at the early stages of this, and a lot of the idiocy in our politics today is due to people beginning to feel the pain from this and,
So,
casting about for answers from charlatans and, people who really are not going to be able to help them very much.
Do you think AI is going to play a big part in currency, both crypto and non-crypto?
mm,
Yeah, I would even say it probably already is because, in the regular banking system, they do research every day. The government thinks about, if I print more money, where's it going to go? Will it help the people it's supposed to help? And in a commercial bank, if I make a loan to somebody, will they be able to pay me back? How much
right.
risk am I taking? AI already plays a role in these exercises, day
Yeah.
in, day out. And I think, essentially the understanding of economic policy, the credit risk of different clients and so forth, will do better and better because of these tools that will allow us to more quickly make sense of the data. There's no avoiding this. There's been science fiction talking about this stuff since the 40s and 50s.
Yeah.
Yeah.
And it's now starting to arrive in very interesting ways. But I think we may just be at the beginning of something that's going to get a lot more challenging, but also a lot more opportune for the next generation.
Because things are changing so much too. That we have so much more to learn.
Can I ask one last quick
Yeah.
question?
Yeah.
What is incentivizing people to make these coins?
There's basically two answers. One is just trying to get rich quick. But the other is, most entrepreneurs are motivated by trying to solve a business problem that, has
Mm.
been very costly to society over time. And often the money to them is a secondary consideration. And, I just think the challenge and the vision and trying to bring it to life is often what motivates people to solve, a problem that is costly to society in some way.
Mm.
And you can use these digital assets to, accomplish many things if you can harness the algorithms and get them in the right markets and so forth.
Well, that's a very
Mm.
hopeful way to end, isn't it?
Yeah, it is. It is. Well, I want to thank you. We want to thank you for coming and talking to us. I feel like I learned a lot. Still have so much more to learn.
All right. Well,
Yeah.
I've enjoyed the discussion. Thank you for having me on.
Thank you.
Absolutely.
Thank
All
you.
right.
Thank you for watching or listening to The Internet is Crack. Tune in next week when we have another great conversation about robotics, AI, and the internet. You can watch us or listen to us on YouTube or Spotify or many other outlets. And don't forget to follow us on social media. See you next Monday.